Hi everyone, welcome to Tuesday, and every Tuesday we quickly jump on, have a look at the performance for the NZSX 50 for the week. So this is for last week, so what will that be? The week ending the 3rd of May. So before I jump across and share my screen, just remember this is for educational purposes only. It's certainly not intended to be personalised financial advice of any kind. It's just how I see the markets, and this is just the methodology that I use. Obviously, there's a number of different methodologies and things out there. So let's have a look. Right, as you can see here, I have got the S&P NZSX 50 up on the screen, and last week we had a little bit of a down week. It fell not much, only about just over 1%, which is not a big concern. On a positive note, we are seeing a bit more volume creeping in, which is great. So it means that there is a little bit more buyers and things out there, so that's is good to see. We can see here though that our moving averages, that whilst the 15-week moving average is trading above the 30, it is a great sign. It is slightly below that 15-week moving average. It's not a big concern because it is quite common for the markets to sort of trade in and around those moving averages. What we don't want to see is when the moving averages cross, which is what happened back here in about August last year. And obviously that was, the market had already started declining, but the moving averages are a little bit of a laggard, so it does take a while for them to catch up, to actually demonstrate what's happening. But it also would have saved you a heck of a lot of pain going all the way down to where it fell to just about 10,700 points level. So at the moment, as you can see, we're trading at about 11,800, which is great. So we have come a long way in such a short period of time. So like I say, it's just a little bit of caution out there. Just keep an eye on this. It's nothing to be super worried about. If I've got any long positions, so any bought positions in the market, I'm certainly holding those, and I'm making sure that I have got my stop losses in place. So if the market does turn, and this is the start of something else happening, then I've got my stops there, which will protect me, and it will mean that I'm not going to ride a share all the way down to the bottom. No, it also means that I'm not going to get taken out of the share at the top. But as you can see, everything needs breathing room, and that's what I always refer to it as. We can't keep breathing out forever, so we can't expect our share markets to do that either. When I look to see how much volatility is in the market, which is simply this ATR, so the average trading range, divided by the current share price, we're seeing about 1.6% volatility. So that really historically is quite low. Okay, you can even see that on the chart. So way back here in July 2020, we could see it was trading at about 245 points. So that's roughly how much you could expect the NZSX 50 to move in a day, whereas at the moment it's trading at around 196. Like I say, it's about 1.6%, so it's not a lot. So not a lot to really report at the moment on the NZSX 50. It's doing what it does. We'll just keep an eye on it and see what happens. Now, if you're obviously watching this as well, come back on Thursday. I'm going to have a look at Precinct Properties and just see how that share is performing. So until then, have a great week. Thanks very much.